$0 down, no monthly mortgage insurance ever. Sounds like an easy choice if you were comparing VA versus FHA. But in this case, I just got a question that shows why a lot of military families, they get stuck on the wrong comparisons. And over time, that can cost you real money. I want you to listen to this and let's pay attention to what's actually being decided. Weldon. I'm a staff sergeant at Fort Carson and I'm about to PCS in 8 months and I want to buy my first home. I've got $15,000 saved and a 640 credit score. My buddy says that I should use an FHA loan because VA loans, they take too long and sellers don't like them. But my wife says VA is always better. I don't know who to believe and honestly, I'm not even sure what the real differences are. Can you help? Absolutely. Great question. So thankful you sent it in. In what I heard there was 8 months, $15,000 saved, a credit score that actually qualifies for both loans. And he's getting advice from his buddy. I also heard that. Now, what most people miss though, is that your buddy, they aren't always wrong. In fact, we get the better answers a lot of times just by sharing ideas back and forth. But he's giving you the version that he's seen. And sometimes that works. But in the military world, it can get expensive if you ignore what your benefits are, your timelines, the other constraints that you're placed under. So that's why today we're going to break down the VA loan versus the FHA loan. That's going to be head-to-head comparison on 8 different factors that actually matter. And then by the end, you're going to know which loan fits your situation and most importantly, why. Stick around for number 6 though, because that assumability, we're going to talk about VA assumables, that can matter when rates start to move up. Now, starting with factor 1, this is the down payment. This is the obvious one. So FHA, that usually requires 3.5% down, and VA, that can be 0% down for eligible borrowers. And here's an example, $400,000 home. So we have our staff sergeant here, $15,000 saved. With FHA, almost all of it is going to go to the down payment. But with the VA, he's going to keep the $15,000 in his pocket for moving expenses, furniture reserves, whatever his family might need. Now, I would never recommend to buy a home and spend every last dollar you have on the down payment because Murphy is going to happen and you're going to need to have that emergency fund. So if you have an emergency fund and the down payment, that's a different set of circumstances. All that said, don't buy a home unless you have an emergency fund. The clear winner here in my book is going to be the VA. Now, here's a quick interrupt, and that is the PCS and VA loan decisions. These can get confusing very fast. There's a lot of numbers that need to be compared. And one mistake, that can cost you real money. So what I did, if you look in the caption below, you're going to see some resources to get the VA loan cheat sheet. Go there to that website. It's askweldonhobbs.com/resources. Download that, fill it in for yourself. And then if you want, book time, and I will walk you through your numbers and make sure you get connected to a lender. I'm not a lender, but I've seen it enough to where I can kind of point out some gotchas before the gotchas get you. Now, what I do is I connect you with real estate professionals across the country that are values aligned and understand the constraints that you might be under as a military member. I certainly understand them. Been there 10 times over throughout my military career, and now I'm happy to guide and help others doing it now. So that said, let's move on to factor number 2, mortgage insurance. So this is where the long-term cost difference, it actually shows up. And what do I mean by that? So FHA, they have mortgage insurance in 2 parts. The first, it's an upfront fee, usually about 1.75% of the base loan amount. And then the second, it's actually an annual mortgage insurance premium that's paid monthly. For many common 30-year FHA loans today, that annual rate, it's right around 0.55%, so a little over 0.5%. The easy math on this, again, $400,000 loan, let's use 0.55, it's $2,200 a year. Call it about $180 a month. And if you put less than 10% down that FHA mortgage insurance, that typically stays for the life of the loan unless you refinance later, which is going to be an additional cost at a time. But VA loans, they have no monthly mortgage insurance. 0, ever. A one-time funding fee for many borrowers, though. And that first-time use, and if you put 0% down, it's going to be around 2.15%. On a $400,000 home, $8,600. You pay it once, and many borrowers, they actually just end up rolling it into the loan. Many veterans, they may be exempt from paying this in the first place as well, too. And what do I mean? Well, if you have a VA disability or disability rating of 10% or more, that fee can actually be waived altogether. So the simple comparison here, though, is FHA, it's usually a monthly cost for 4 years. VA, usually a one-time fee. So depending on how long you keep the loan, that difference can add up fast. Winner, VA. Factor 3, these are credit score requirements. So our staff sergeant here in the example, a 640 credit score, here's where it matters. So FHA, they technically allow for credit scores as low as 580 with a 3.5% down, or even a 500 with 10% down. The challenge, though, that's going to be finding a lender who's actually going to give you the money at those lower credit score rates. That's harder to do. But VA, they have no minimum credit score from the VA itself, and that's on va.gov. Every credit score that you see as far as a requirement, that's going to be lender dependent or a lender overlay, if you will. And in this case, our staff sergeant has a 640. He clears both of those easily. So what do we have? We have a tie, 640, both loans, they're available to him. Now, factor 4, loan limits. FHA, they have county-based loan limits and they change every year. VA loans, though, they're different. If you have a full entitlement, there's no official cap. You can finance whatever you actually qualify for. This matters if you're PCSing to a high-cost area, so places like San Diego, Northern Virginia, DC metro area. FHA limits, they can squeeze you, but VA, that usually gives you more room. Winner in my book, it's going to be the VA. Now, we're at 0.4, and the VA, it's winning 3 out of the 4 of them, but here's where people really mess up, and this is factors 5 through 8, the ones that your buddy probably doesn't know about or just hasn't experienced. Factor 5, these are property requirements, and this is where your buddy's advice, this is where his heart is coming from, what he's trying to advise you about, and he's not completely wrong. Both FHA and VA, they care about basic habitability of the home. They want something that's safe, it's functional, it's livable, and it's your primary residence. So in practice, either loan, they can flag conditions that the house must meet in order for them to give the money to you to buy it. Now, FHA, they can be picky in some situations, and VA, they can be more picky. So it just depends. And what is that depends? Is it depends on the property and the appraiser. So the practical move here is to walk through that home whenever you go to see it with a real estate professional that can kind of point out some of the things that might be flagged and see if it's even worth the time to put the offer in. Because that list of things that the house has to comply with, it could be more than what the seller is willing to invest in the home. So the winner here, though, it's a tie. They both have the minimum property requirements. The home and the condition of it, that matters more than the label on the loan. Factor 6, and that's assumability. This is the one I didn't want you to miss out on, and we hear a lot about it. But VA loans, they are assumable, but so are FHA loans. Here's why it matters more, though, for VA. So say you bought a home today at some rate, and then 3 years from now, you want a PCS, and rates have climbed for whatever reason. A buyer, they can assume your VA loan. They can take over that rate that you got, and even if they're not a veteran. That can make your home, it can make it stand out compared to an identical house next door with a non-assumable loan. In that high interest rate environment, that makes your home attractive. FHA loans are assumable too, but the buyer still needs to qualify, and FHA mortgage insurance comes along with the assumption. So the value, there's not as much value in that situation. But with VA, there's no monthly mortgage insurance to assume. The winner here, it's VA. A quick note though, assumptions, they aren't automatic. The servicer, the one that holds the mortgage, they have to approve whoever's coming in to actually trying to buy and take over your loan. And with VA, your entitlement can actually stay tied up unless that buyer substitutes with their VA. So that means you would have to sell to a veteran, or else yours would be continue to tie up until that loan is released, if you will. So still, in the right market, the assumability, that can be a real advantage. Drop a comment if you've ever sold a home with an assumable VA loan. I want to hear how it went for you. Factor 7, this is multiple uses. This is where the military advantage really shows. Your VA benefit, it doesn't just go away after one use. You can actually use it again and again and again. Sell your home, pay it off, you get your full entitlement restored. Keep the home as a rental, you might still have enough remaining entitlement for your next purchase at your next duty station. I've seen military families, they've built small portfolios over time when they just bought one duty station, kept it, moved on to the next. And in that case, they were building true wealth streams for themselves. Now, that doesn't fit every family, of course, but the VA benefit, that can be your first step in order to start that snowball. FHA, though, it's different. You can only have one FHA loan at a time. And in most cases, if you want to keep your current home and buy again, FHA probably isn't an option. The winner here, it's the VA loan. And for the right family, this can be a meaningful wealth building advantage for the rest of their lives. All right, factor 8, this is seller perception. Let's address your buddy's concern directly. So do sellers actually prefer conventional loans over a VA or FHA? Historically, some sellers, they were nervous about government-backed loans. They would worry about appraisal, or they would worry about surprise repair requests, timelines. But the reality right now, especially like VA timelines, they can be comparable to conventionals. We've seen it, and the lender that I oftentimes recommend, he's done it within 21 to 24 days. And a good lender, that makes all the difference in the world. So between VA and FHA, sellers often prefer whichever offer feels more certain. If you've gotten your pre-approval, that's a step in the right direction. Your job is to remove the fear. Strong pre-approval, like I said, clean terms, a lender who can close on time. So the winner here, it's not a loan type, it's the execution. So the scorecard, if we're keeping score, which we are, added up, 8 factors. VA usually has the edge on down payment, monthly mortgage insurance, repeat use, and often loan flexibility or loan limits. The credit, that can be a tie, we determined that. And then property requirements and seller perception, they're usually situational, and they come down to the home and the market that we're in or you're in, and the team that's executing on your behalf. So when would you ever choose FHA over VA? Mostly you're not VA eligible, or when FHA fits your situation better. For example, a certain credit profile, a specific property condition, or a lender strategy that improves your odds in that market. For our staff sergeant at Fort Carson, if he's eligible and he has a solid lender, VA is usually the move. It keeps more cash available and it avoids monthly mortgage insurance. And here's the bigger point though. This isn't just a loan decision. It's a wealth decision and a life decision. Every choice you make now, that's going to affect your options at your next duty station and the one after that. If you want the full plan, look at the caption below. You're going to see a link. It'll take you to my website. Download the VA loan guide there and look through it. Answer those questions. Book time on my calendar and I'll help talk you through it as well. I will connect you with the right lender that is made for your situation, no matter where you're moving to. And if you need other help, I will talk you through that too. I'll connect you with a real estate professional wherever you're PCSing to. I'm Weldon Hobbs. I'm a veteran. I've been there 10 times over, and I help military families make cleaner decisions, better decisions around PCS moves, money, and housing. Good decisions start with good information, and I'll see you in the next one.